Another beautiful day on this learning platform. Welcome! In this video, I will discuss the real story between Adani versus Hindenburg. Make sure to watch this video till the end because somewhere in between I have a surprise for you that will change your game. And if you are new to this channel, make sure to subscribe. Let's get started. The Hindenburg report launched a direct torpedo against the Adani Group on January 24, 2023, and it wreaked chaos in the Indian capital markets. 7 Adani companies lost more than $100 billion in market value as a result of this absurd impact on the stocks of Adani. And since the publication of this study, the entire Indian population has been divided into two extreme groups. While on one side people disregard the Hindenburg study outright and claim it is an attack on the Indian economy, on the other side people totally embrace the report and begin criticizing the Adani Group for committing a hoax. After laying out all the arguments in front of you, we chose to read both documents as closely as we could to ensure that you understand the Hindenburg report as well as the Adani Group's comments to it. It is entirely up to you to determine who is correct and who is incorrect. But the best part is that regardless of who triumphs or fails, the one positive aspect of this drama is that it aids in helping in us retain the most spectacular business concepts for you to learn. Let's take a closer look at this episode today and attempt to grasp what Hindenburg's strongest arguments against the Adani Group are. What are the Adani's reactions to these criticisms? And most importantly, what reading material can you use to better grasp the Adani Hindenburg saga? Let's start at the beginning and comprehend why Hindenburg cares so much about Adani and what they stand to benefit from this knowledge. As it turns out, Hindenburg is a financial research firm that hunts for man-made or self-created problems and employs a technique called short selling to profit from a company's stock price decline. Considered a scenario in which Think Solar, one of the listed firms on the Indian stock market, is currently trading at 10,000 rupees per share, and Ayush, a very astute investor, believes that the price of Think Solar's shares is too high and that they would soon fall sharply. What IU ought to be is to borrow 100 Think Solar shares from Parsh from a period of 30 days. Parsh is one of the Think Solar shareholders, and the terms of this deal require that Ayush return 1 lakh shares to Parsh after the loan term. Parsh should also earn a commission of 0.21, which is determined by a variety of factors in exchange for this lending power, such as stock market volatility, financial indicators, and so forth. A stockbroker would function as the intermediary in this transaction and would once more be compensated with a commission. Ayush currently owns 100,000 shares of Think School, each worth 10,000 rupees. He would start selling Think Solar shares for 9,000 rupees right away. He would sell 90 crore rupees worth of share in total, and when he sells 1 lakh shares, that's such a significant discount. The entire market will sense that something is seriously wrong with the solar stock. There will soon be a market panic when even stockholders or Think Solar will lose money. They'll begin selling it in big quantities, and when the panic spreads, the price of solar stock will plunge. Ayush would definitely buy back the shares for just 8,000 rupees, so that when he purchased 100,000 shares at that price, it would only cost him 80,000 rupees. Whether these accusations are accurate, Hindenburg would still profit handsomely if the stocks fell as a result of fear-mongering, which is exactly what happened. Is it a crime? Because there are short selling, there is no such thing as right or wrong. Without reading or comprehending the Hindenburg report, you cannot simply disregard it. Let's attempt to comprehend the changes or the charges regarding the Hindenburg and Adani's reaction to them. Now that everyone is aware that Adani, who had a net worth of approximately $112 billion at the end of 2019, had acquired the majority of his riches in the previous 3 years. At the end of 2019, his net worth was around $20 billion. However, the remaining $100 billion was amassed in the previous 3 years alone. And according to Hindenburg, this was primarily due to an increase in the stock prices of his group's 7 most important publicly traded companies. If you look at only the last 3 years, the price of Adani Enterprises stock has increased by 1,398%. The price of gas has decreased by 2,121%, and the price of green has increased by 908%. How did Adani Enterprises amass such fortune, and what is the secret to their expansion? Their depth strategy has been a key contributor to their success, in addition to their cutting-edge execution. One of the most significant findings of Hindenburg investigation is this. To further grasp this, let's use a clear example. Consider Things Enterprises, a publicly traded business with a market worth of 10,000 crores. We have 3 further firms under this. It's called Think Power, Think Infra, and Think Green, with a combined sales of 2,500 crosses and a net profit of 500 crosses. These 3 daughter firms have a tremendous opportunity to grow over the next 10 years, despite not yet being public. Think Enterprises would have been to reject any bids for the construction of a port that would cost 7,500 crosses, since we do not have the profits to cover that much. The banks would be reluctant to provide us a loan of 7,500 crosses, given our meager profits of just 500 crosses. The final way we may raise money would be by pledging our shares. For example, if the firm is worth 7 billion crosses, it would pledge 10 of my shares in the company, which are worth 750 crosses. The bank would then conduct a risk analysis and grant me a loan of 350 crosses. In this instance, 7,500 crosses today prevent me from pledging 80% of a mistake and raising these loans. However, a reluctant steps in that at this point and creates a complex structure to make sure I can easily obtain these projects. First, we would decide to put all 3 of our daughter companies on stock market. And because to Think Enterprises' strong brand recognition, they would all have successful first public offerings. Think Green's market cap will reach 100,000 crosses in the next 5 years. Think Power will reach 10,000 crosses. Think Ultra will reach 5,000 crosses, and our shareholdings will now total of 75,000 crosses. Here is how Think Infra might raise 7,500 crosses if they wanted to, as opposed to 7,000 crosses and 3,500 crosses respectively. First, by estimating its profits, it would raise 2,000 crosses. The banks wouldn't mind financing you 2,000 crosses if your company made 500 crosses in profits, because they know you could easily pay back the loan, just your profits over the 4 years. In this manner, 2,000 crosses have been raised, but we still require 5,500 more. Here is when the second method comes into play. In this technique, Think Green would pledge 10% of its stock to a bank loan due to the high stock price of the economy. If you want to share your opinion, comment down below. And if you have not yet already, please subscribe to our channel and press the bell icon for daily interesting and helpful contents. Thank you for watching and see you on the next one.